Good evening. I hope everyone had a great weekend, especially all the fathers. Today, the market started off the week with a nice win, as the S&P 500 posted a gain of 0.66%, while the Dow had a slightly worse gain of 0.59%. Lastly, the Nasdaq recorded a gain of 1.11% and closed at a new record high as shares of Apple, Microsoft, and Netflix led the way up as each gained more than 2%. Today was a big day for Apple investors as it held its 2020 Worldwide Developers Conference. During this event, many new things were introduced. Notably, Apple announced that iOS 14 is on its way. On top of this, they announced new software for iPads, Macs, Apple TV, and Apple Watch. Interestingly, Apple announced that their new Macs will now be using chips made by Apple, while they previously used chips from Intel. There was a lot more to unpack at this event, but the show must go on. If you're an Apple investor or user, I encourage you to check out all of their new announcements. Getting into some economic data, existing home sales fell by 9.7% in May compared to April's numbers. This brings sales down 26.6% on an annual basis, and is the largest annual decline since 1982. The meager supply of homes for sale didn't help either, as not only did potential sellers decide to wait, but some already on the market pulled their listings. Inventories nationally fell 18.8% compared with May 2019. At the current sales pace, it would take approximately 4.8 months to exhaust the inventory. Supply was lower across all price points. There continues to be a large divergence between single-family homes and condominiums. Single-family home sales fell 9.4% month to month, while condominium sales were down 12.8%. Regardless, realtors expect these numbers to be the bottom. The nation's home builders appear to be benefiting from the lack of existing homes for sale. An index measuring home builder sentiment took a major leap in June, after plunging in April, according to the National Association of Home Builders. In our daily coronavirus update, the World Health Organization said that the rise of the coronavirus cases are not a result of more testing. On Sunday, the number of new cases reported to the World Health Organization jumped by more than 183,000, which was easily the most in a single day so far, according to WHO officials. Quote, "Clearly, when you look at the hospital admissions, they are also rising in a number of countries, and deaths are also rising. They're not due to increased testing per se. So there definitely is a shift in the sense that the virus is now very well established on a global level," according to Mike Ryan, Executive Director of the WHO's Emergencies Program. As of Sunday, the U.S.'s 7-day average of new COVID-19 cases increased more than 24% compared with a week ago. Hospitalizations are rising as well. On Saturday, President Donald Trump said he asked officials to, quote, "slow the testing down," reiterating his claims that more testing was the reason that the U.S. has the most cases in the world. White House economic advisor Larry Kudlow announced today that a second wave of coronavirus cases isn't coming, and that lawmakers will likely develop another stimulus package by the end of next month. Quote, "There is no second wave coming. It's just hotspots. They send in CDC teams. We've got testing procedures. We've got the diagnostics. We've got the PPE. And so I really think it's a pretty good situation," according to Kudlow. While no final decisions have been made as to the content of any bill, it's, quote, "highly likely that the House, Senate, and White House will coordinate on some form of economic relief after the July recess." Kudlow said, quote, "Things the president has talked about publicly. He has talked about a payroll tax holiday for the workforce. He's occasionally talked about capital gains tax relief. He wants to help out with some form of tax relief. Restaurants, entertainment, athletic contests, things of that sort. We want to help out the tourism business, which has been hurt very badly. We also want to reward people who are re-employing, who are going back to work." It was announced that there is close to $5 trillion in money market funds. Money markets aren't the only sign that investors are holding cash outside of stocks and bonds. Deposits at banks have spiked as well, according to data from the Federal Reserve Bank of St. Louis. Quote, basically, anything that was liquid and that you could sell was put up on the auction block, said Nella Richardson, investment strategist at Edward Jones. With the end of the second quarter approaching, there could be a move from fund managers to reinvest that cash in stocks to reach allocation targets. Richardson said she expects the market to take a technical move higher as investors move back into stocks or high-yield bonds from cash, especially with interest rates so low. Quote, with real returns being basically nothing, and the Federal Reserve saying that they expect to keep the federal funds rate near zero through 2022, that only amplifies the incentive to rotate back into equities, according to Richardson. Tech led the sectors today, gaining more than 1.5% on average. Utilities also posted a gain of more than 1%, while both basic materials and consumer services gained around 0.8%. Telecommunications performed the worst, as it recorded a loss of more than 0.8%. Growth stocks performed the best today by far, with all three sizes gaining more than 1% on average. Large cap value was the only basket of stocks to end in the red, as they lost 0.3% on average. The best day in the S&P 500 came from popular clothing retailer The Gap. Today, they finished the day positive by 8.26%. This large move upwards came on the news that Wells Fargo had upgraded the stock to overweight, while it was previously rated as an underweight. Wells Fargo applied a price target of $19, while the average price target is $10.66. According to the Wells Fargo analyst, quote, at a high level, we believe the company's fundamental struggles are now well appreciated by the market, but there are two compelling value unlocks we see as underappreciated. One, in conjunction with GPS's recent ABL debt transaction, the company disclosed real estate value of $1.9 billion. Two, Athleta, which is the highest margin and fastest growing concept in their portfolio, is underappreciated. Even though athleisure has clearly accelerated due to the pandemic, this has not translated into a value appreciation for the Athleta brand within GPS. The second largest gain came from Carrier Global Corporation, which gained nearly 6% during trading today. Carrier Global is an air conditioning, heating, and refrigeration company. Their gain came on the news that UBS rated Carrier as a buy and applied a price target of $26. The company's fire and security business provides a, quote, source of resiliency during uncertain times, with longer-term upside coming from portfolio rationalization efforts and relatively lower exposure to commercial HVAC markets, writes analyst Marcus Mittermeier. The largest loss came from American Airlines, which lost 6.75% during trading today. This move came off the news from the weekend. Yesterday, American Airlines reported that it will be raising $3.5 billion through offering more common shares and secured senior notes. American Airlines has been in a cash problem since the beginning of the crisis, and they needed to do something about it. This may get them through it, but obviously, investors do not like share dilution and the company taking on more debt through notes. The other largest move downward came from Norwegian Cruise Lines, which lost 6.2% during trading. This move downwards comes on the back of a continued rise in coronavirus cases across the entire world. With more cases, there continues to be added uncertainty of when the cruise lines will be able to return. Today, only one notable company reported earnings, which was W&T Offshore, ticker symbol WTI, which is an oil and natural gas producer. Today's earnings were mixed, as WTI missed on revenue but beat on earnings estimates. Non-GAAP EPS came in at 4 cents per share, beating estimates by 2 cents. Revenue missed estimates by a slim $5.79 million, as they reported quarterly revenue of $124.13 million, and actually had a rise in revenue on a year-over-year basis by 6.9%. Investors seemed pleased with the results and currently have shares up 3.33% during after hours. That is all that I have for you tonight. I hope you all enjoy the rest of your night, and as always, I'll see you again tomorrow.